Good day. This is Peter Kniff from Castlestone Management with comments on the U.S. markets for the week ending June 19th. The Dow Jones had its worst week in 8 months, and U.S. stocks came under pressure as the Fed changed its point of view and started talking about tapering. Most of the damage to stocks came after St. Louis Fed President Jim Bullard said the Fed had been surprised by the rate of recovery in the economy. The Dow Jones fell 4.3% on the week to 33,290.08. The S&P 500 fell 1.9% to 4,166.45, and the Nasdaq Composite slipped only 0.28% to 14,030.38. Tech stocks did not get hit as hard as some of the other recovery stocks. The 2-year Treasury note yield logged its biggest weekly gain in nearly 2 years as the idea of the Fed talking about ending its QE program lifted the short-dated yields and flattened the yield curve. The 10-year closed the week at nearly 1.45%, with the 2-year note at 0.25% and the 30-year just over 2%. The U.S. dollar index jumped to 92.314, its highest price since mid-April. The index recorded its strongest weekly gain in roughly 14 months as investors seek some safety in the dollar. Gold prices, like all assets this week, were impacted by the Fed speak and fell roughly 5.6% on the week. That, of course, influenced by that spike in the dollar. Oil prices rose last week after OPEC suggested it expected limited U.S. output growth this year. Both WTI and Brent posted over 1% gains this week. I think it had more to do with the rally, with the recovery in the U.S. economy than actual comments out of OPEC, but that seems to be what the market was looking at. Thanks for listening. Thanks for doing business with Castlestone. Stay well, and we'll talk to you soon.